Support and resistance. Have a look at this chart. As I mentioned, the market moves in waves. At certain points, you see that the movement reverses for a while before resuming in the same direction in case of trend, or entirely reversing the direction in case of reversal. The peaks and troughs at which this movement happens are important and are referred to as support or resistance levels, depending on the direction of the movement. Let's look at another example in more detail. The chart here is Netflix daily chart from the 29th of November 2019 to the 26th of June 2020. The price is moving up from December 2019, represented by point 1, till mid-February 2020, which is point number 2. Then it starts to reverse. It's as if the ball bounced from a ceiling above, which we call a resistance level. Then around the 17th of March 2020, point number 3, the trend starts to reverse again towards the original direction, that is upwards. So, the point number 3 represents a support level from which the price bounced. Another point of importance is that the support and resistance levels can switch roles if the price crosses over. For instance, the resistance at the price level, represented by point number 2 at $395, was penetrated when the price bounced from point number 3 and continued to move to point number 4. Now, as that resistance was broken through, it acts as a support for any further pullback. This is shown in point number 5 and number 6, where the price bounces off from the level as a support, which had acted as resistance at point number 2. Here is another example. Support and resistance levels can be found in any time frame. We discussed a couple of daily charts earlier. The one here is a 5-minute chart for AMD. You may notice that the support level at $111.90 at the market open became a resistance level when the price moved below that level. All support and resistance levels are not created equal. The importance or the weightage of a particular support level may be much higher than another one, and that gives a higher probability of trade going in our favor if we are planning to use the support or resistance level to take entries. Number of times the level has been tested. If a support or resistance level has been tested multiple times, that is a stronger level compared to the one which has only been tested once, that is, just a single bounce off the level. See example here for Snap, 5-minute chart on the 24th of March 2022, where a resistance level was tested multiple times. So, this can be considered a strong level. Now, when this was penetrated at around 3:20 p.m., we can enter a long position with a high probability that the level will act as a strong support, which is what we see as the price takes off after bouncing off the level at 3:30 p.m. Here is another example from daily chart for Snap. Volume of shares traded at the price level. This is again applicable across time frames. If the traded volume at a price level is high, so is the importance of that level. Now, this can happen over a longer period of time as the price continues to oscillate around the level. Or, it can also happen in one shot if there is a sudden spike in traded volume within that minute, or hour, or day, or whatever is the time frame on your chart. The duration of consolidation around the level. The longer the price stays at the level, the stronger is the support or resistance. The time frame on which it is constructed. A support or resistance level on a weekly chart is more significant than that on a daily chart, than that on an hourly chart, than that on a 5-minute chart, and so on. We will discuss later that when we day trade, we not only look at the 1-minute, 5-minute, 15-minute charts of the same day, but also the daily or weekly charts over a longer horizon. That gives us an overall sense of trend, but for this discussion in particular, it can give us a level that we may otherwise miss. If during the day, the price is at a level that was a strong level on weekly chart, Then we can expect movement around the level. Recency. How recently the level has been tested. The more recent, the stronger is the level. An important point to keep in mind is that levels are not pinpoint price levels. So, you should not limit a level to the last penny. The price at which the bounce happens can be a little above or below this. Take it as a soft sponge layer rather than a concrete line. When you plot it on the chart, you will usually plot a line, but in your head, you should know that there can be a soft range around it from which the price may bounce. Let's look at some common support and resistance levels. Previous day close. As the name indicates, the price at which the stock closed the previous day is referred to as PDC. Previous day close. Due to the recency factor, it can be an important level for day trading the next day, and many traders have this plotted on the chart. All the trading tools provide an option to have it on the chart automatically, and you do not need to manually set a line or level. Let's see an example. As you can see, we had the PDC plotted when we started trading on the 24th of August. And the stock respected the level a number of times, first as resistance and then as support. Opening price. While PDC is derived from previous day's trading, the open price is for the present day. The price at which the stock opened is a significant level, as the market forces of supply and demand agreed on that level to begin the day with. See example here. The opening price acted as a resistance level at multiple touch points during the day. Pivot points. We will cover these in more detail in next chapter. For now, just know that there is a formula-driven approach to arrive at some key levels on the chart that are often respected in price movements. We are not going into too much depth here, as we will cover this as part of Key Technical Indicators section. Let's look at this example. Just keep the visual in mind and how stock traded between these levels, bouncing off almost precisely off these walls. Moving averages. These indicators are discussed in detail in the next section, but the reason I am introducing them here is to give you a more comprehensive perspective on the kind of levels and indicators used to identify support and resistance. The moving averages are plotted based on the average price levels of previous X candles. X can be any number you set on the chart. I use 4 moving averages: 9, 20, 50, and 200. The higher the number of candles considered in moving average, the higher the significance of the level, as it is a reflection of a longer-term trend. Moving average 200 is a stronger level versus moving average 50. Similarly, moving average 50 is stronger compared to moving average 9. See the example here. For clarity, we have plotted only one moving average, and you can see the price bouncing off this curve. Don't worry if you do not understand this now. We will go in depth on moving averages in next section. Levels based on daily or weekly charts. These are quite powerful levels. You start with a longer time frame, say daily or weekly chart, and then try to identify some key levels or ranges. And then these levels are visible in shorter time frames as well, if you use split charts like the ones shown here. During the day trading hours, if you see the price movement is gearing up for a potential meetup with a daily level, it is worth considering as a probable support or resistance level. See example here. From the daily chart on the left, we saw the price moving between a range marked by blue lines. On July 22nd, we see that DKNG is trading close to the top line, and this level could act as resistance. Then we move to the 5-minute chart on the right and see that the price did bounce off that level and moved all the way down. One could consider this as a significant resistance level and play a trade on the short side. This is not usually the only consideration for getting into a trade. As we will see later, in advanced trading strategies, we usually add up several signals and indicators to increase the probability of getting a profitable trade. levels based on intraday ranges. Even the price ranges within the day can give us support or resistance levels. See this chart here. Here, this level is acting as resistance. The price shot through the level here. This level can now be a strong level of support. As we can see, the price did bounce off this level.